Hey, welcome back to ICT Trading Concept. How are you all? So in this video, I would love to show you the thing I have outlined beforehand to my life. Just life I have done. So this is the gold market, and I would like to show you the way I read the price and the way I told you to see the price. Okay. So let me go to the 15-minute chart first. So there is the 15-minute chart. You can see this all the last fair gap. Okay. I told you please observe the last fair gap. If you see this fair gap is actually willing to hold the price, then market will go and take that buy side liquidity. If it failed to hold the price, you will start to think market will come here to this 15-minute last fair gap from this leg. Okay, there is another leg. So this is the last 15-minute fair gap. Price is actually going toward that fair gap. So remember, this is the 15-minute fair gap. I'm going to 1 minute chart now. So this is the 1 minute chart. Look, when price came to this 15-minute fair gap for the first time. This is the last fair gap, remember. So price went through this fair gap. But this thing, I saw it as a fake breakout because on candle closed just below the fair gap. The very next candle, it closed inside the fair gap one more time. So in my opinion, that is the fake breakout. After seeing this fake breakout, I have marked this on as my sell side liquidity taken. I was waiting some kind of market structure shift over there. But see, there is no market structure shift. So when I don't see any market structure shift over there, I didn't see, I didn't look at the chart or this fair value gap as my entry fair value gap. I wasn't interested to take my buy over there. Okay. Why? Because I didn't get any market structure shift. And guys, I have already explained everything beforehand to my life, today's life. Okay. So price went lower one more time and another again it gave me another fake breakout. One body close below the fair value gap. The very next candle came back again inside the fair value gap. What I told you about the fake breakout. If I see one time fake breakout, that's cool. That's cool. That means the last fair value gap is not broken yet. That means it has held the price. But when I saw another fake breakout, that is kind of confirmation that this fake breakout, this is not fake breakout. Okay. I'm sorry, guys. I'm little sick. This is not fake breakout. If you see 2-3 times fake breakout, you will start to think, okay, this is not fake breakout. This is the signal that market is telling you, brother, I would love to go lower. Okay. So when I see this fake breakout, I got sure that okay, now market is actually going lower, not higher. So after that, market went little bit higher. It went lower. It has taken the sell side liquidity. This is the market structure shift. Price started to go higher. When it started to go higher, I wasn't looking for buy. Though I have a very clean buy sell liquidity over there. See this clean buy sell liquidity. I am not going to take my buy over there. This is the first fair value gap, the breakaway gap. This is the last fair value gap. The fair value gap where I should take my entry. Okay, but I am not willing to take my buy. Remember this run when I was live? I told all of you that it has taken the sell side liquidity market structure shift. This is fair value gap. I am not willing to take my buy over there. Why? Because this is the fake breakout. There was another fair value gap, if you remember or not. I didn't want to see that market will go higher. Instead of that, I was looking for a sell. So when price come lower, there was a inversion fair value gap. I took my sell over there and price went lower perfectly. So here the same thing, when price started to go higher, I was thinking it is actually going higher to take all of this buy side liquidity. Maybe it will take this buy side liquidity as well. Okay, I don't know how many buy side it will be taken, but I was thinking like that. I would love to add more over there to the inversion fair value gap. Okay, I'll explain the entry over there. Just give me some more time. So when it went higher, it has taken all of this buy side liquidity from here, this area. Every buy side liquidity has taken over there. Price went a little bit lower, it went higher one more time, taken this high as well. After that, it went lower. Okay, when it went lower, I was just, this is the market structure shift. Okay, a very little market structure shift. Price trade to this fair value gap specifically. Very clean fair value gap over there. It has traded that fair value gap lower, went lower, traded this water block level one more time, went lower. I didn't do anything over there. I'm not sure it is going to fall or not. So I wasn't sure. Okay. Price came lower. One more time, it has broken the last favorable gap from the 15-minute chart. This is the 15-minute favorable gap. Don't forget the 15-minute last favorable gap. Look where the price closed. It closed below the 15-minute favorable gap. So it is also kind of the fake breakout, but see how many times? 1, 2, 3, 4 times. 4 times can't be the fake one, right? It it's telling me, brother, I really would love to go lower. So don't take buy. Whenever I'm going high, try to take sell. It is just directly it is telling you that. Why? Because this is the last 15-minute fair value gap. It failed to hold the price. So this, I mean this low, there is another low actually. If I can mark the low, yeah, this low. So this low is now obvious. Price is going to take that low now. Okay, this is more obvious now. Why I took my entry? I always talked about the breaker entry. I love the breaker, so it's my choice. Look, when price starts to go lower, high, low, higher, high. Okay, the lowest candle. This is my breaker. So when price come to this breaker level, I took my sell. I mean, because of the spread, it actually went lower. I didn't take my entry over there because I was looking for this setup. Actually, market has taken the buy side liquidity, market structure shift. This is the breakaway gap, this is the first fair value gap. I should take my entry over there. So I was waiting because this breaker and this fair value gap are breaker consequent encroachment and this fair value gap are actually at the same level. So I was waiting when price come here. I took my sell because of the spread. It filled over here somewhere. Okay, so that was the reason for the first entry. Now why I add more over here? What is the reason? Okay, let me actually explain the reason. This is the highest fair value gap to that leg. Okay, that leg, this is the highest fair value gap. As I have two fair value gaps, so I am going for the highest one. Okay, and when I am looking for this as my inversion fair value gap. Okay, I'm not looking this fair value gap, brother. There is another fair value gap to that candle. See, I'm not looking toward that fair value gap. I will actually take a partial over here. I would love to take a partial over there. I think, can I make a buy limit over there? I think stop loss can put over here. I don't know why it's not working, but let me actually put it over there. And now let me try one more time if I can create a new order. Okay, so I will put it buy limit. Okay, so that is the buy limit. Because of the spread, I will put it over here so that when price will go to that level, it will be taken already. Okay, so I want to be sure that it will work. See, it has already go below the buy limit, but it didn't close the buy limit. So I want to take a partial over there because that is a obvious low. When price will go below that low, I want to take a partial. I don't want to be in the losing portion. I want to be always the winner. It's fun, man. It's fun, really, really. The reading price action is fun. So price come to the breaker. Also the second fair value gap. It came here, boom, broke. This is the inversion fair value gap. This swing high failed to take the highest high. So this fair value gap, when price went through that, this is my inversion fair value gap. Okay. So when first time price come to this inversion fair value gap, I add more. Now I add more over there, it filled over here because of the spread. You all of you understand this because if it was the Nasdaq, then I would be filled maybe at this level. But as this is gold, because of the spread, it feel little lower over here somewhere. Okay, whatever. So I added more over there. So this is the confluences, and I believe market will come to this last fair value gap, but I will go until here because that is the obvious low. See, it has taken that low. Still my order didn't close. I really don't know it will close or not. I mean, it will let me take the partial or not. I'm now afraid if a winning trade turns into a losing trade. It's kind of the very risky thing. Okay, if I can take the partial over there, I will put my stop loss to the break even, though it is not safe because of the spread. If price come over here, maybe it can come over here one more time, because there is another fair value gap that is also very important, because this is the last fair value gap and overlapped with this fair value gap. It can come to this last fair value gap one more time, maybe because of the spread. If it happens and I put my stop loss to the break even, because of the spread I will be stopped out. Okay, so I'm not sure, but I will do that. After taking the partial, I will do that. Let's see if it can take it or not. Till now it didn't. See, seriously, oh man, let me actually do it personally. Can I do it by hand or wait? Okay, as I'm sure market is coming here, I can wait. So this is the precision, brother. This is the way you have to read the price. You shouldn't be worried about this long run. Every time if you look for the setup, you will get the setup. See, market has taken the sell side liquidity, very clean market structure shift to fair value gap. First fair value gap entry, you can expect market will go higher, but this will be activated when this the last fair value gap from the 15-minute chart will hold the price. As it failed to hold the price, there is no need to think market is going higher. There is no need at all. You should have think market is falling. Now it will work 100% of the time. I don't know. Maybe not. Maybe it won't work like 100% of the time, but most of the time you will see this will work. Okay, that is why I force you to learn the price action or the fair value gap concept. It helped me to get so many winning trade. Okay, so you can see price has taken this liquidity and started to go higher, so it can trade this area one more time. This last fair value gap from this 1 minute long run, it can come to this fair value gap one more time, then it can expand lower, or maybe it will go higher. I don't know, because it has already done its job, primarily job over there. This is the extreme one. I mean, this is not the extreme one, this is the lowest liquidity over there, and this is the extreme level where price could come. Okay, so everything on the table. I'm just doing it in front all of you. I have outlined it beforehand in front all of you when I was in live. If you missed the live, you can watch that live where I actually explained every single thing. Okay, everything, how I will read the price, how will I think about the gold market over here. And now I'm just showing you the gold market. It's because I always talk about the what is it, the Nasdaq market. Okay, so but you can see it's the same thing. Okay, I just give you the example from Nasdaq market or the mini S&P market, but it will work the same way to all other market. It will work the same way. Okay, now it went through, came here, it has taken this liquidity, failed to hit my partial. I have no idea, maybe it will be a losing entry, but to be honest, that is the reason I trade Nasdaq, because if it was Nasdaq, then I would take my partial over there, my stop loss, I mean my entry would be here and until here. Okay, so I could put my stop loss to my break even with confidence. But this is what it is. I don't care about, I mean, if it hits me, I'll be happy with that. Okay, because you see the precision, the way you will take your entry, the way you will read the video entry. Okay, and as this is the paper money, though I believe it is going to take that low and finally it will reach over there. Let's wait some more time. Okay, if I can explain some other price action over here. Now there is a fair value gap over here, that is the last fair value gap overlapped with this fair value gap, and price is traded that area. Also it has traded this order block, this candle open, you see it traded that order block level. At the same time, it has been rejected from the 15-minute last fair value gap consequent encroachment. See, so many things over here, so many things over here. It should go lower, it should go lower. It should not use the recent fair value gap as a supportive fair value gap. It should not do that, but it can do that. There's no one who can tell that why did you do that, but it shouldn't respect this fair value gap as a supportive fair value gap. Okay, it should go through this with a big run. It should do that type of things. Let's see if it can happen or not. I know it's gonna be a little longer video, but as I'm going with the price, I believe it will help you to understand the price action, the way you will read the price, and I have no idea how it can be more easier to explain. Okay, I believe it will be easier for you the way I read. Okay, but if it let's see how it works. Okay, I mean, let's wait some more time if it can work or not. If I messed it up, I'll be happy. But I think I proved my point how you will read the price, and you will understand what I mean to say. It shouldn't, I mean, go above. It should take at least this low, at least this low. Okay, when it will take that low, then this type of move, I should be worried about them. That move after taking this low, not that low, because this is kind of shallow run. Now this liquidity level has got more obvious level that should be taken now. Let's see. Waiting, I'm waiting. And by the way, guys, I just before uploading this video, I got 2,998 subscriber. I'm really happy because that is unexpected. I never expect that's huge crowd. That is huge crowd for me. I'm very happy. I mean, I can't explain it by word. I really appreciate all of you. Thanks for being with me and believing in me. I guess that is that is the biggest achievement for me right now. I have a very bigger family. Some of you will think, oh man, you have only 3,000 subscriber and you are thinking you have a very big family. But for me, that's huge, man. Now I have 3,000 people who actually like me, who loves me, who love my content, everything. Okay, so that's huge for me. Maybe it's not huge for some people, but it's huge for me. So I can just thank you. I don't know how I can thank you, but really thank you, man. Really thank you from my heart. I really I'm 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 grateful to all of you. Thanks for believing in me. Thanks for being with me. Okay, and whatever price action I'm reading here, the way I read, I trust me, brother. I always explain the things I do. I don't like to show off. So whatever I'm doing here, I do it when I do live trade. Okay. Now, if you expect that you are going to lose, you are never going to lose, you will be the loser all the way at the end of your trading journey. You will be the loser. If you ever think that you are not going to take any losing entry, all you need to do is you have to work with your psychology. If you can work with your psychology, you'll be the winner. Okay, losing entry, it's just a part of this game. Losing, you will take loss, you will take win. That is simple. Okay, that that is not going to determine that you are a good trader or you are a bad trader. Every single trader, even the Larry Williams, ICT, whoever you know, okay, they all take the losing entry. We can predict the price. Our prediction will work 100% of the time. Nobody can tell that. So sometimes you will be wrong, sometimes you will be right. If you ask me, I expect that if I can open my chart and if I can get 30% of the time, if I am right, I'm happy. I'm happy with that. Why? Because every single time I try to pay me by the partial. Okay, see over here the buy limit. Now it didn't feel it, I know, but if it was Nasdaq, you all, if you know, it would give me the partial already. Then I would be, maybe I would be, my stop loss would be here, because that would be the level. In Nasdaq there is no spread, so my stop loss would be the in at the break even. I wouldn't care about it will hit it or not. If it doesn't hit that, instead of that it went lower, I will get more profit. If hit me, I have already got my partial. So I am on the winning side. Okay, so this is the way you have to think. If you wanna be a consistent profitable trader, then you have to think like a professional trader. Okay, the professional trader, they never think I'm not going to take a losing entry, so I'm just going to kill it, because I don't want to make it more longer. Whatever I wanted to explain over here, I guess you guys got my point. This is the way I read the price, and this is the perfect way to take the entry. So later I will explain if I see anything else to my Twitter. Best of luck, guys. See you. Bye bye.